And hello, everyone. Welcome to another power scanning session. It is July 19th. My name is Daniel, and today, together, we will be once again on the lookout for the most interesting swing trading setups for the week and weeks ahead. But before we get into it, let me ask you guys, where are you calling in from? I myself am calling in from our beautiful office here in Montreal, in Canada. It's a nice summer day. It's hot in the office. Our air conditioning is still broken, unfortunately. But yeah, better too hot than too cold, I'm saying. All right. So who do we have in the room today? Please put your location into the Q&A box. We have Andreas from Salzburg, Austria, Österreich. Hi, Andreas. How are you? We have Stefan from Hamburg. Hey, Stefan, nice to see you. Who else do we have? Please put your location into the Q&A box. Another German-speaking client. We have Gerd from Coesfeld, Germany. Hey, Gerd. Feroz from Toronto, next to, quite close to Montreal, 6 hours drive approximately from Montreal. Susan from Dresden, Germany. Dresden is a beautiful city. I've been there. When was I there? Maybe 2 years ago at a concert in the, forgot the concert area in Dresden. It was very nice. Ralph from Skummeslöv, Sweden. I hope I pronounced that properly. Skummeslöv, Sweden. Hey, Ralph. We have Stephanie from Gatineau. Hi, Stephanie. How's it going? I think Stephanie is also a German person disguising as somebody from Gatineau near Ottawa. Niels from Basel. Hey, Niels. How's it going? Perfect. Wow, lots of German-speaking people in the room today. Maybe even more than English-speaking people. Maybe one day we're going to switch the language. I'm just joking, from German to English. Okay. Well, with this, let's get started. So once again, today, we will be looking for swing trades. So swing trades approximately last, of course, it's not written in stone, but last around 2 to 20 weeks. And we're not looking for long-term investments, and we're also not looking for day trades. So swing trades are right in the middle. I like to call them these sweet spot trades because to me, at least for my trading personality, these have just the right duration. Get in and fairly quickly you get out, but you don't have to day trade them. All right. So, and also Joseph from Alabama. Say, hey, Joseph, how's it going? Perfect. And the idea is that we will show you today our approach so that you can use the very same, filters and setups, and you will be able to find them very quickly. So we call this the 30 minutes Sunday strategy. Of course, our dashboard updates every day after each trading day, but especially on the weekend, perhaps you want to sit back a little bit, maybe switch on your computer after dinner at night and prepare a little bit for the week ahead. And what you can do is you can open our dashboard and run a couple of scans to see which stocks currently have interesting setups and perhaps which stocks you may want to consider for an entry when the market opens on Monday. All right. Now, with this, a quick introduction of who we are. We are tradingindicators.com. My name is Daniel here on the left-hand side. And together with Homa, we have created trading indicators from the ground up around 10 years ago. And then halfway through our journey, Niklas has joined us. Niklas is in the room today as well, and we'll be looking out for questions. Over the years, we really specialized in creating trading indicators, as our name may suggest. We've built over 1,000 of them for clients all over the world. But it didn't stop there. We also have built fully automated strategies and also trading scanners and dashboards. And one such scanner we're going to be using today to find the most interesting swing trading setups for the week ahead, which is called our Liquidity View dashboard. And you will see most of what we do is based on a fairly simple process. In trading, just like with many aspects in life, keeping things simple oftentimes is the better approach rather than overthinking things. And because we believe in simplicity, we also basing ourselves today primarily on what's called technical analysis. The beauty about technical analysis is basically that's something that everybody can learn. You don't need to have a PhD in finance to be able to do technical analysis. It's basically just figuring out what is the trend doing and where are key support and resistance levels in relation to price. And once you have these two information, you can already find some really interesting setups. With this, let's get into it. And just one last remark. If you have any questions, please don't be shy. Put your questions into the Q&A box, and Niklas will be looking out for these questions and bring them to my attention as we go ahead. All right. Also, a quick reminder that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. when it comes to backtest performance or hypothetical performance, or really anything based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. Okay, so before we get to the markets, a couple of housekeeping items. First off, please check out our bootcamp at tradingindicators.com/bootcamp, which is a bootcamp for our Liquidity View dashboard. Why am I saying this? Because in these sessions, we are really only, using a couple of the many features that we've built in. If you want to know what all the features are all about, learn about every single aspect of the dashboard, check out our bootcamp. It's very comprehensive and very detailed to learn everything about the dashboard. And you may be surprised. Perhaps there's a feature that you perhaps didn't know it exists, and the bootcamp will reveal it to you. Also, we have a Discord channel at tradingindicators.com/Discord. It's completely free, so consider joining simply by going to this link. And this link is also posted into the chat box. And what we're going to do today is we will be scanning for setups interactively, and it would be really cool if you would follow along using the dashboard, perhaps even opening it up in your browser using the exact same filters and criteria that we will be using today. And if you don't have access yet, you can sign up right now. This will only take perhaps 30 seconds to sign up at tradingindicators.com. You get a full week of a free trial. And if you like what you see, you can then take advantage of our monthly or yearly options for the dashboard. And the beauty about this is that you will get access right away. So instant access, no waiting period. You can start using the dashboard right away. We've also written an ebook on the main setups that we will be discussing today. It's called The Power of Three. You can download it from this link here, tradingindicators.com/power-of-3. And last but not least, if you have any suggestions, and I'm really thankful and grateful to everyone who has mentioned some suggestions to us via email or perhaps directly in the chat here, because these suggestions will drive the further development of the dashboard. So, for example, one feature that we just recently integrated is the ability for me to share my watch list with you. So this was recommended by a user. Well, we listened, and now it's part of the dashboard. And so if you have any ideas of new features, please don't be shy, don't hold back. Your feature will drive future development. And this way you can have your voice heard, and perhaps one of your features or feature ideas will find its way into the final version of the dashboard. So please don't be shy. Put your questions into the Q&A box or send them to us by email. With this, without further ado, let's get into it. Let's start with the market review. So for this, I'm going to open up our dashboard. There we go. And we're going to start with the SPY. So what has happened since last week? So I'm going to open up the SPY, the S&P 500 ETF. All right, so I'm going to put this to full screen. And let me just quickly configure my background just to make this a little bit nicer. There we go. Full black always looks a bit better. And I'm also going to remove the liquidity capture labels here. We don't need them. Okay, perfect. So what's going on right now? Well, first off, we are still above resistance. We know we broke above this resistance level back here in June, on June 30th. A break above resistance. And I was warning, and I've been warning ever since this break happened, okay, we may see a correction down to this broken level. We would call this, if this happens, the zone break retrace setup. It hasn't happened yet, but I believe there's still a good chance that this may happen. Why? Because oftentimes after an initial move to all-time highs, of course, we had all-time highs last Friday, yesterday, in the SPY, many people will book some profits, take some risk off the market, which could lead to a correction and a move towards the broken resistance level, which, however, at that point will act as support. So if we ever come down to this level, then I think this could be a great opportunity to enter long into an SPY position in the anticipation that trade or that prices will continue its bullish move. Another thing I would like to point out is the following. So I'm going to scroll back a little bit, and what we're going to see here even further, because I have, this is something I noticed with the dashboard today. In fact, if you perhaps see the same phenomena on your screen, for some reason, only a subset of the historical data is loaded. What I wanted to show you is that our MA rush indicator remained bullish despite this big correction. And you can see it if you go back to the scanner. MA Rush has been bullish for 545 trading days. And of course, this V-shaped correction earlier this year, this happened much less than 545 trading days. So MA Rush remained bullish. And what I wanted to tell you is that this indicator has been designed to be as conservative as possible, meaning it will only change its mind when there are really strong indications that a trend change has occurred. So remarkably, despite this big V-shaped correction here, or this pullback, the MA Rush indicator remained bullish, and rightfully so. Look how fast we recovered from this big correction. Nonetheless, my take here on the SPY is that be careful. Definitely be on your toes, because we may see a correction back to this broken resistance level, which can then be a good opportunity to potentially enter in the long direction. All right, so next symbol is the QQQ, the NASDAQ 100 ETFs. It's a very similar picture here. Also here, we did break above our resistance back in at the end of June, and ever since, the prices have been pushing higher. We made all-time highs yesterday also in the SPY. But also here, look how far we are away from our averages. And, it's really just a matter of time until prices will pull back to these averages. You can see it here and here happening, and of course, in this big correction here. So this will happen. It's just a question of when it will happen, not a question of if. So also here, be careful. The air is thin up here in the QQQ's all-time highs. So entering now into a long position. I mean, it is possible that prices will push higher, absolutely. But I will wait for a bit of a pullback, at least a level 3 pullback here, a trend radar indicator, or a level 4 pullback, which would mean that the first 4 rows of our trend radar indicator are becoming red. The last one will stay green, and this could be an interesting long entry opportunity. But at this point up here, I'd rather be careful. I'll wait for prices to come down, and they will eventually come down. All right, so that was the QQQ. What about the Russell, the IWM? Let's check it out. So the Russell is at a very different stage. Why am I saying this? Well, let's see what's happening here. We are, first of all, miles away from all-time highs still. Yeah, so these all-time highs, in fact, were not even the all-time highs. If you go further back, and I'm worried that this is not going to load, but prior in the past, prices were up at this level as well. I'm not sure why it's not loading today. This will be fixed, tomorrow for sure. We made all-time highs back, or near all-time highs back in November, but then a big correction. And we corrected back to the upside, but we are nowhere near at these all-time highs. So here we're still miles away. And what's interesting here for the Russell is that we are approaching an intermediate resistance level here. Do you see this green box? That's resistance. And it's going to be interesting to see what happens if prices are coming a little bit closer to this level. Will we see a bounce off this level, or will we break through it? And if you break through it, then we have another resistance level all the way up here. So quite a different picture here. Nowhere near all-time highs, but this could also mean that, the Russell is perhaps some sort of laggard. It's going to follow suit eventually. And since it's a bit underpriced right now, maybe it's in the Russell where the long entry opportunities are. But right now, I'll be careful, because we are approaching exactly this resistance level. All right. So that was the Russell. What about gold? GLD, the gold ETF. There we go. And gold is something I'm personally invested in. I bought some call options back when gold retraced down to this MA rush line. You see it here. We went up. We made all-time highs on April 22nd. Then a correction down to this MA rush line. Prices went up again. Another attempt at resistance here with a liquidity capture. We're going to talk about this a bit later today. Prices bounced off to the lower end, and then once again down to this MA rush line. And I pulled the trigger here. I bought some call options at this level in the anticipation. In fact, I bought some out-of-the-money call options to get them a bit cheaper, in the anticipation that prices are going to bounce off once again from this level and will continue its push towards the resistance level all the way up here. I'll probably liquidate my position once we are near this resistance level. I think we're going to push a bit higher next week, maybe the next 2 weeks, and then it's probably time to get rid of these options, these call options, because we may see another bounce off this resistance level to the downside. By the way, we said it, was it 2 weeks ago, maybe 2 weeks ago, that this pullback here, so the trade of the week, which we announced, was about 3 or 4 weeks ago, where we said, hey, go long gold, it could be a good idea. Prices went up, but they came back down once again. Look where they stopped, exactly at this MA rush line. So this has been acting very nicely as dynamic support. And sometimes this is important to see because oftentimes prices are nowhere near our static levels of support and resistance. You see this red box here and this green box, but you still want to enter into a trade. So your guides in this case would be either that prices are approaching this dynamic support level of MA rush, or we'll see a substantial pullback, like a level 4 pullback in our trend radar indicator underneath. So these are two tools that you can use if prices are somewhat in no man's land with respect to support and resistance, statically calculated on by Liquidity IQ. This can happen quite a few times. And if you still want to enter into a trade, the MA rush lines and trend radar can be your guides for this. All right. So moving on to oil. And for oil, we typically use USO, the United States Oil Fund. And here we called it out last week, we are approaching and have approached intermediate resistance. Do you see this one here? This little green line. It's not the highest resistance level, which would be all the way up here, but it's an intermediate resistance level. And prices came up to it, and then we saw something which is oftentimes a very telling characteristic. We saw a liquidity capture. Let me just enable this real quick on the indicator to make this a little bit more clear. So enable liquidity captures. There we go. And we can see it here. We did have a liquidity capture on this bar, and oftentimes that's a sign that this level is going to hold and prices will bounce off this level. Show you some other examples of this. Look at this one here. Prices went all the way up to this resistance level. Couple of liquidity captures, this little shaded area here, and we bounced below. Down here, when prices went to this support level, look here, liquidity capture, we saw the bounce to the upside. So look out for these ones. These can be sometimes very telling signs that we actually are going to see a bounce. And in fact, with our scanner, we can scan for exactly these events. We're going to do this a bit later today in this session. All right. This was oil. What about Bitcoin? All right. Bitcoin, of course, broke out above its resistance level. And don't mind my beautiful drawing here. I drew this a bit earlier today. Showcase also showing that Bitcoin is flagging a little bit. Yeah, we had this big push upwards, and now we're in this horizontal flag. It's a bull flag. And when this flag will be broken to the upside, I think we're going to see another big push. There's an ambulance passing by here. We're going to see another big push to the upside. That's my interpretation. But, you know, these flagging move, these sideways move could take quite some time to resolve. But if we resolve it to the upside, then we're going to see an acceleration towards higher price levels. And many people say 150,000 is not out of the picture, or it's not an impossibility for this summer. So we're going to see if this can happen. Yeah, very bullish in Bitcoin, but I would be careful. I'll be waiting a little bit to see if this break will happen, because it's also not impossible that we're going to retrace down to this broken resistance level. So here I'm going to let the market decide. I'm going to wait on my sidelines, let the market show me the direction, and then potentially enter in the direction of the breakout. All right, perfect. So moving on, this was Bitcoin. What else do we typically go through? I think that's pretty much it. That's our market review. All right. Monikas, are there any questions so far?
No, you can keep going. We just have a comment from, we just got a question. It is symbol request for later, but Dave says when the market's soft, I guess he means kind of like summer trading, it's harder to find qualifying setups, in his opinion.
Yeah, possibly. Nonetheless, we have tried to find some last week, and let me just actually let me review what we have found. So I'm going to open up the watch list from last week's scanning session from July 13th. And we can see these the setups that we found. And let's just walk them quickly to do a bit of a retrospective of what has happened or what has happened to these setups. So starting with AFLAG. AFLAG was our trade of the day in our Tuesday session. And yeah, it's working out quite nicely. We are here in a situation where prices came down all the way to a key support level. You can see it here. And the idea was to enter into the long direction, anticipating a bounce off this level. And at least yesterday, the last 3 days of last week have shown us that this bounce might be in progress now. For all these symbols which are currently correcting like this, you can see after a strong move up, now we enter into a sideways phase. Just keep in mind that these sideways phases, they can continue for quite some time. So this becomes important for booking your profits, because I would be very conservative. I would potentially enter here, but book my profit potentially when prices are back in the middle in the sideways channel. Why there? Because sometimes prices just go up a little bit and then go back down to the support level. So I'm going to book my profits fairly early today, as long as we are in the sideways consolidation pattern, and this can take quite a while to resolve. So Affleck's looking pretty good. Arthur J. Gallagher, yeah, our good old companion. Now, we've called out the stock many, many times. It's a beast of a stock, but it's struggling as of late a little bit. But nothing dramatic. We are right at the support level here. And also here, the idea is that prices will bounce off this support level and eventually that this very strong bullish trend that we are in, it's a very consistent bullish trend, will eventually continue to the bullish direction. So also this one is an interesting long opportunity. Nothing much has changed since last week. So, and I guess Dave is correct. Prices are moving slowly. Exxon Enterprise. Here we had a nice zone break retrace setup. One of my favorite setups. Look at this one here. What has happened? Prices came up and then they retraced down to this broken level. And the idea is when prices do so, we're going to see a bounce off this broken resistance level, which is now acting as support, which will act as a launch pad for higher price levels. So this is, yeah, in progress, working out so far, so good. Moving on to BBVA, Banco Bilbao of Argentina. Aubrey told me that this is a Spanish bank for some reason, even though it says Argentina, like a Spanish bank from Spain. Nonetheless, an interesting setup. We can see it here. Zone break retrace. Let me just pull this down a little bit further. 1 second. There we go. Zone break retrace. And I like this one for a long because we're still exactly in the neighborhood, because here we have the rare case that support and resistance are very near together and we have a gap to be filled. So here the idea is that I'm going to enter long at these price levels and wait for, at the minimum, this gap to be filled and eventually prices to push higher. So real quick, German Telegram communication, not much has changed here either. It's a stock which also bounced or is near a support level, and the idea here is as well for the stock, for prices to bounce off this level. I have the feeling that this stock will be in a lengthy consolidation phase. If you look at this one here, we made all-time highs back in March, but since then we are in a sideways price move via price channel. And I think this is going to take a couple of months, maybe years to resolve. So also here, just put your profit target conservatively somewhere in the middle. Prices hopefully will come back to this price level here. Book your profits there, exit the position and wait for prices to come back down again potentially, because this may happen a few times. You can profit every time price approaches either support down here or resistance up here by anticipating a bounce off these levels. All right. Esquire Financial Holdings. Real quick. Yes. So this one we missed out, unfortunately. Maybe you didn't follow my approach from last week. I was hoping that prices will come down all the way to this broken resistance level. It didn't happen. Prices came down a little bit, but then they turned around again. We made, I believe, all-time highs on Friday, and I think this move is now going to continue in the bullish direction. So this one we missed out because of our conservative entry procedure. And then this can happen if we want price to come down to the level where we are feeling comfortable to enter. Of course, sometimes this has the downside that we will miss out on a trade. That's part of the game. And real quick, FICO was an interesting one too, where prices came down to support. Now we had this big bearish bar a couple of weeks ago. It stopped right at the support level as we anticipated. We did have a liquidity capture a couple of bars ago, and now the idea is that prices will bounce off this level towards the middle in between support and resistance. Once again, Marshall McLennan, very similar case. Also here, we are right at support. And here, we had the specialty that for this particular stock, look what happened here. This support level is very nearby this support level here. That means these two levels are very close to each other. And I said, and this is my experience, is that oftentimes when this happens and we have two support levels right next to each other price-wise, it is often the lower one, the second one, which is the more meaningful one, the more powerful one. So here, if you are in this trade, make sure that you put your stop loss under the second level, because it's not unlikely that prices will come to test this level and then potentially turn around. And last but not least, JP Morgan. Of course, JP Morgan Chase did have earnings on Tuesday last week. Earnings did not disappoint. They came out positive and yeah, just as expected. And what I've done, let me just quickly hide my liquidity capture label so it's a bit clearer. And I'm also going to hide MA Rush. What the idea here is that we had a break above resistance back in June. Prices went initially up and then the retracement down to the broken level. And look how amazing this worked out, almost to the cent. This bar here wicked down to this former resistance level at 280. It came down there, and the idea was, okay, now after this initial fake out, this zone break retrace, now the market is primed to pull up again. So then I was observing price, and last Sunday when we had a webinar, we discussed this the idea of entering. When was it? On July 11th, we discussed it. On Monday, I then executed on it. I sold some cash secured puts for JP Morgan 1 day before earnings are coming out. And the earnings were coming out on Tuesday morning before the market opened. So to do this pre-earnings play, you would need to enter into the market on Monday. You had no choice. So on Monday afternoon, I did sell some at-the-money puts. I think strike price 288, something like this. Why cash secured puts? For two reasons. First off, JP Morgan is probably the Cadillac of bank stocks out there. So even if I get assigned, even if I get assigned these 100 shares, if I sold one contract, this would not be the end of the world for me. I would not mind having this stock in my portfolio to begin with. That's always an important criteria for selling cash secured puts because, you may get assigned. Okay. Secondly, earnings were coming up the next day, meaning the market assumed some extra volatility the next day or the next days after earnings are coming out. That was already priced in on Monday, of course. So puts were expensive, in other words. So, of course, this is also why I didn't decide to buy calls, because also calls would have been expensive. So I decided to sell puts, collect an expensive premium. And the idea was, this is a bullish play, that prices then will continue to upper levels. So this didn't happen right away. On Tuesday, in fact, after earnings, prices went down a little bit. But interestingly, when I looked at my portfolio on Tuesday after market close, actually this position was still positive. So I sold puts, which is a bullish play. Markets came down a couple of percent, but I was still positive. Why was that? Because the puts I sold were very expensive on Monday, because this volatility of the earnings day was priced in. So even though prices went against me, the puts actually lost its on value. And since this was a short play, I gained something. So this was great. Now prices have recovered from this. I'm going to probably liquidate this position when prices will approach the all-time highs here, which are typically acting a bit of a resistance that I don't want to give back on this bounce. Okay, so this was happening last week. Now let's see if you can find similar setups for this week. So I'm going to go back to my slides real quick. 1 second. There we go. And we're going to, now be on the lookout for new setups for the week ahead. So what we're going to do is we're going to look at one setup at a time. Based on what we see, we're going to create a hot list, which I will also be sharing with you. And then at the end of the session, we will do a detailed analysis of the setups that we found to see if we can hone or focus on a couple of them. And if you had read our "Did You Know" letter from yesterday, I hope you had it in your inbox. We were discussing the case, that a watch list, which is too big, can lead up to paralysis because you don't really know what to focus on. So the idea is to really find a couple of gems in the rough, the needle in the haystack, the stocks which have the best setup right now. And if this is only one or two setups, well, then so be it. At least then we're honed in, we're focused in, we're not lost in in a scenario where we have too many symbols to track. All right. So what are the three setups? The first one is going to be our bounce setup. And what is a bounce setup? What I like for this one is that a symbol has been trading up for a long time. So long-term bullish. We've been pulling back a bit. This could be visible in our trend radar indicator. And ideally, this pullback will coincide with a key support level. You can see it here. Prices, have been bullish, pulled back to a key support level, and we then anticipate, a bounce off this level towards the middle in between support and resistance. So how can we find those setups? Back to the dashboard, and let's enter these criteria. So I'm going to go back to my end of day scanner. There we go. And I will now first filter our 5,080 stocks. You can see it here. I'm going to filter by trend direction because this is a bullish play. I want to focus on stocks which have been bullish for a long time. So I'm going to go to MA Rush here and select bullish. On one side, we can see that of our 5,080 stocks, only in quotes, 2,405 stocks are currently bullish. You can see it here in this column. Every single value in here, every single row has an arrow pointing upwards and a number next to it. This number actually is important. Let's pick this one here, ABG. So ABG is a stock which it doesn't look like it, but it turned bullish a couple of days ago. Of course, then prices came down, but this can happen. So it turned bullish a couple of bars ago, in this case, 3 bars ago. And if you count the candles from the last candle back to this bullish label, you will get exactly 3. So in some sense, this number here is an indication of the trend duration. What I like to do is to focus on stocks which have been trending for the longest time. So in order to hone in on this, what I'm going to do is I'm going to sort. I'm going to sort by trend. You can see we have a couple of currencies here too, but the first stock that comes up, interestingly, is Eli Lilly. Bullish for 1,403 trading days. Doesn't look like very bullish right now, but if you actually zoom back, you would see that this stock actually has been bullish for a long, long time. Okay, so that's our first scan criteria. The next scan criteria is that we want these stocks to have pulled back to a key support level. How can we find these? Well, this is where our liquidity IQ indicator comes in. What we want to find is the prices are, unlike this symbol here, unlike Eli Lilly, where prices are near one of these red levels here. These are key support levels. And if prices are down here, then we would speculate for a bounce to the long side. So this setup, when prices come down to this level, in fact, this was also one of our trade ideas here, the idea would be a bounce to the long side. So this setup is called long bounce. I'm going to go here to, oops, 1 second. Did I disable my column? I did. All right, let me just clean this up a little bit. Give me 1 second. I'm gonna take out market cap, and there we go. Now it's a bit bigger. Okay, so this setup is called long bounce. So here in our liquidity IQ setup column, when we click on filter, the first one you find here is also called long bounce. So I click on it, and now we're down to only 85 stocks. Okay, so now we can go through these step by step. I'm going to focus on the ones which we haven't discussed previously. And of course, we had discussed German telecommunication. It was part of our watch list from last week. Yeah, nice setup. Still the exact same setup as last week. Prices are near a key support level. So also here the play would be for a bounce to the long side. In fact, let me create my watch list right now. I'm going to go down here, create. There we go. I'm going to call it setups, 2025, July, and today is the 19th. Create. And next, what I will do is I'm going to go down here and I will share. See this little button here on the right-hand side? This is a button which is only available to me, which allows me to share this watch list with you guys. So I'm going to do this right now. And now whenever I add a symbol to this watch list or remove a symbol from this watch list, this is going to be visible on your end as well. You should have this watch list now in your drop-down after you reload the dashboard. All right, so I'm going to continue populating this this watch list. And the first one that comes up is German telecommunication. I still like it, but you know what? I don't want to really repeat of what we have done last week because many of these symbols are quite similar, like German telecommunication, Arthur J. Gallagher, and Marshall McLennan. These are all stocks which are still on our watch list this week. I guess it's summer trading. Market is moving slowly. So, but you know what? I'm going to add it anyways, just in case. So this is still valid. So let's add it. So German telecommunication, Arthur J. Gallagher, we discussed it previously. Yeah, still a nice setup. I'm going to add it as well. It's a monster of a stock. And Marshall McLennan, here I'm gonna skip this one. I still think it's really valid, but the fact that we do have these two support levels right next to each other, I'm gonna wait. So I think that's I have a feeling it may happen. I'm going to wait for prices to come down to this level, and then we are going to add it back to our watch list. I'm going to skip this one. Coca-Cola Consolidated. This one has been on our watch list. Guess when it was? Exactly at this price level here. We called it out a couple of weeks ago on June 16 when prices came down to this key support level. And this is exactly what we want to see, a bounce off this level towards the middle in between support and resistance. And this exemplifies one more time the importance of putting a realistic profit target, especially if a stock is in a lengthy consolidation pattern. Now, the move may not go all the way back, so you want to book your profits early. So actually, let me quickly have a look here on my trade note for Coca-Cola. When did we call it out? Now we have one note here from July 5th. This was a magnet zone trade, but let me go. Oh, this was the only one. Okay. Nonetheless, it's an interesting setup here. I want prices to come down one more time to this level. And then I'm interested in entering in the long direction. So I'm going to add this one to our list, but we're going to define an entry level around here. So I want prices to come down a bit further, and then I want to enter into the long direction. So I'm going to add this one to our watch list. FLAG. FLAG was our trade of the week, of the day on Tuesday in our lunch and learn session. It's working out nicely so far. And I think this move is already in progress. I'm not going to skip it for now because prices are turning up already. It's still not too late, but here I think this move might be happening now. And the ideal entry time, of course, was when we called them out as prices came down all the way here. Now we're a little bit further away. It's still, of course, not really far away. But here I'm going to skip this one for now because this is already in progress and we discussed it last week. AGO, Assured Guarantee Ltd. All right, let's have a quick look. Yeah, not my favorite setup. Can you guess why? Look at where we are right now in the bigger scheme of things. So it's very clear that this is a really long bull flag. I'm not sure why this is not loading. We're definitely going to fix this very soon. So you have your flag post. Actually, let me draw. This is my beautiful drawing skills here. So we have this flag post here, and then we have the flag from here to here. And look where we are right now. We are right in the middle of this parallel channel. So I don't really trust this intermediate support level. Yes, it's support. Yes, we had some liquidity captures here. I still don't fully trust it. I think prices, there's a good chance that prices may come down all the way to the lower end of this bull flag in this sideways consolidation. So to me, not the ideal entry point here. I'd rather wait. Now I'm very conservative with the entries for prices to come down here. They may not come down, then I'm going to miss out on this trade, but I'm not comfortable at this level, so I'm going to skip this one. All right. And one more, perhaps, EDN, Empresa Distributoria. I wonder where this stock is from. It sounds a bit Spanish. Well, it definitely sounds Spanish, but let's see if it's actually from Spain by adding my country filter here. No, Argentina. Okay. I wonder if Aubrey's in the room. Aubrey, are you there? He's not. Aubrey is, of course, a big fan of South American stocks, especially Argentina. Let's have a quick look what's going on here. Nah, too volatile for my taste, even though it's probably long-term bullish. This move up here and this huge correction, or more than 50%, it's not my cup of tea. I think this could be a sign that, hey, this trend really has reversed to the downside. All right. Fair ISA Corporation, FICO. It's an interesting one. Oops. 1 second. Get rid of this. Fair FICO Corporation, yeah, also in a wide channel, and this is being traded in the United States. Let me quickly enable the currency for this one. We added actually, by the way, we added 2 new columns to our dashboard. When did we do this? Last Monday, I believe. The first one is currency, and then we also added the exchange. Oh yeah, so this is traded in US dollars, super expensive at $5,400. So options are probably not a good trade idea here, but the idea is still valid that from a technical point of view, we are at a key support level. We had a couple of liquidity captures here. We may anticipate a bounce off this level towards the middle in between support and resistance, especially since the stock has been bullish for quite some time, since 742 trading days. So I'm going to add this one to our watch list as well. All right. Perfect. Okay, so this is how you can find bounce setups. All right, this is one of the setups that we really like, especially when we are also in a long-term uptrend. And Ralph is asking for DRI for Darden restaurants. Let's have a quick look, even though we're gonna do the actually, Ralph, let's skip this for now. I'm gonna get back to Darden, I promise you, just a bit later, because it will tie in very nicely with the next setup that we want to discuss, or the next two setups. I'm gonna go back to my slides. And the next setup is our zone break setup. So here we are looking for a resistance zone to be broken to the upside, or a support zone to be broken for the downside. In this particular case today, we're going to look for resistance zone breaks because, I'm typically positioned bullish when it comes to stocks. On average, stocks are more likely to go up than to go down. This is why, we're typically positioned bullish when it comes to stock. So we're looking for breaks above resistance. Something like here where a resistance level, this green line, is broken to the upside. And then we are hoping that this breakout move is continued for quite some time and we can profit from this. But be aware, and this is really important, be aware of a retracement. This can happen a lot. This is why, for example, I said in the SPY, quick jump to the SPY, we broke above resistance. It's very clear. You can see it here. Broke above this resistance level, but a retracement down to it is not unlikely. It happens a lot. And then we have a pattern like this. Break above resistance, prices initially go up, and they can go up for a couple of weeks. This is a daily bar. This would be like 3 weeks probably. And then you see the retracement down to this level. So this fake out of the market after a breakout happens quite a lot. And this is one of the reasons why I, raised a little yellow flag when it comes to entering now bullish in the SPY or QQQ, because we are right at this breakout move here and this retracement may come. But if it comes, and when we are getting down to the broken resistance level, this can be a great opportunity because then we can enter once again in the direction of the original breakout. In this case, the bullish direction, in the anticipation, okay, prices are going to continue its bullish run up. So how can we scan for these setups? Well, let me go back to the dashboard. There we go. And I will now change my filter here in the Liquidity IQ setup column. Let me just quickly hide currency and the country again. Not so important right now. So I'm going to change my filter here to zone break retrace. I click on it. Wow, crazy. And of those stocks, these symbols, only 9 of our 5,000 symbols, only 9 qualified for this setup. That's quite rare. Interesting. Okay, let's see what these are. The first one, in fact, is the currency. I'm not going to discuss this further. I don't like to trade currency from a day trading point of view, but here we can see the zone break and a bit of a retracement afterwards, even though, prices came down a bit, but then they turned bullish on Friday. So I'm going to skip this one. Next one is, actually, let me just sort this by duration. Next one is World Acceptance Corporation. It's an interesting name for a corporation. World Acceptance Corporation engages in consumer finance business in the USA. Out of South Carolina. Okay. All right. So WRLD, nice ticker symbol. Let's click on it. Zone break retrace for 4 bars. Okay. Let's check this out. I like it. I like what I see so far. Yeah. A bullish uptrend, even though it looks a bit too sideways for my taste here. A bit sideways. Let me go back. Yeah. So quite sideways, but this sideways channel, for some reason I can't see all the historical data today. This sideways channel was eventually now broken to the upside. It was resolved. Prices broke out, and now you have your retracement down to this broken level. And also the idea here would be that we now could enter in the breakout direction, which obviously is the long direction. So I kind of like it. Let me add it to my hot watch list, and we'll see later on whether we will execute on it or not. So I'm going to add this one to the watch list. Next, CrowdStrike Holdings, bullish for 445 trading days. Let's have a quick look. Nice bullish move, nice consistent uptrend. I like the fact that the next support level is all the way down here. So, and to me, and again, this might be a bit esoteric. Sometimes when I see a zone break and then a retracement down to the broken resistance level, I sometimes don't like it as much when there is another support level very near below. Because then oftentimes, and this goes back to the same theory that I'm having, if we have 2 levels right next to each other, price-wise, it's often the lower one, which is more significant. And prices are likely to come down all the way to that level. In this case, it's not the case. Yeah, there's really at this only level down here, but that's quite far away. And I believe this level has significance. So I really like CrowdStrike, zone break, retrace setup for a potential long entry here. In the anticipation that we're going to bounce off this level and move towards at least the all-time highs at around 513. So we're definitely going to add this one to our list. All right. And one more, it's NASDAQ Inc. All right. I like it too. But I don't like the fact that we are far away from this retracement. So zone break, a bit of a retracement, then prices went, snapped back up already on Friday. So too expensive right now. We are like really close to all-time highs. Should we come down one more time to this level, then we can reconsider. So here, I really want prices to come down. Here we go. To this level here and then potentially go long. But now we're miles away. So we want at least prices to come down to the 85 area. All right. So we're still going to keep this on our radar, but not on our watch list. All right. So I think you can see how easy it is to find these setups. And if I wouldn't be talking so much, then you will believe me that you can actually find these setups very quickly. I mean, it's because of my explanations and my talking that takes a while, but typically this process, and we do this really religiously every single day before the market opens. So we do it on the weekend for the Monday opening. We do it on Monday night or Tuesday morning before the Tuesday opening and so forth to see which stocks are interesting right now. And oftentimes we act on it. Yeah, we have a couple of positions in our own portfolio, like the JP Morgan trade. We acted on it. The gold trade, we acted on it ourselves. What else do we have? We also have Republic Services in our portfolio currently that we acted on from a bounce off this level and other ones as well. So we put our money where our mouth is, and we find our swing trading setups based by using our scanner. Just the same process as I'm going through now. All right. So let's now review these setups that we have found. So I'm going to go to my watch list all the way down here. And please check at home whether you can see this watch list also in your account. You need to reload your dashboard in order to see it. And let's go through this quickly. So what do we have here? German telecommunication. Yeah, same setup as last week. Really, really nothing has happened. We're still in the same area. Prices have stalled out here. Yeah, it's still on my radar. I like it, but I'm not going to add another trade note here. It's pretty much the exact same scenario as last week. So nothing has changed. We don't have to clutter our trade notes with this one. Arthur J. Gallagher, yeah, same argument. We entered here. Prices are still in the same neighborhood. Nothing has changed. It's really like stalling out at this level. But I still believe that this is a great launch pad for a move towards the middle, in between support and resistance. So we're going to keep it the way it is. Coca-Cola consolidated. I like it, but I want prices really to come down to this level here. Yeah, rinse and repeat, as one may say. Yeah, prices are coming down to this level, and we anticipate once again a bounce off this level to higher regions. And ideally, and this is something we're gonna discuss in a bit. Ideally, we want to see this shaded area here. Remember what this was? It's a liquidity capture. So let me just enable the label in the indicator so it's a bit clearer. So show this label. We can see here, last time we had a liquidity capture here was exactly here, and prices bounced off from it. So you want to see these captures here. These are abnormally high volume bars wicking into support, and oftentimes that's a telling sign that, hey, this bounce is really going to happen. If you look historically, it's, of course, there's no guarantees, but oftentimes bounces are accompanied by these liquidity captures. You can see it here. And here, for example, when prices went into this resistance level, look, no capture. We pushed over it. So I like to see it. And if we come down here to this level in this symbol Coke, we see a liquidity capture. This could be a great opportunity to potentially enter into a long trade. So I'm going to add this one to our trade notes. Adding a new note and adding this screenshot. But here, of course, we want to wait for prices to come down a little bit. Okay, FICO Corporation. I did see a question from Stefan in the comments. Yes, as per trend radar. Okay, great question, Stefan. So here what we see, we are in a sideways channel. And the longer this channel continues sideways, the more this will also be visible on our trend radar indicator, meaning that we have shifted from a bullish trend into a sideways consolidation. You can see this very clearly on trend radar here. Green areas are replaced by fully, green areas fully replaced by fully red areas, back to green, back to fully red, back to fully green, and so forth. That's a clear sign of a sideways pattern. But what I like about this one is that the overall trend, as per Mirage, is bullish. And every time we come down to the lower end of the sideways pattern, here, this end here, then to me, these are great long opportunities to enter into this trade, because overall we're still bullish. And this could be a nice opportunity to just get into this overall bullish trend cheap. But what I would do is that if prices bounce off this level, I would take my profit or somewhere in the middle, because this consolidation phase can continue for quite some time. It may take a year to resolve. But every time we come down to one of these levels, great opportunity to enter along. Here's an example of that. Actually, let me just quickly add this to my watch list. And then I'm going to show you another example of exactly this pattern. Come on. Eli Lilly. Back to end of day scanner. So Eli Lilly, LLY. Here we have it. Look how beautiful prices have bounced off this level every time we come down to it. Also, Eli Lilly, don't get me wrong, is in a sideways consolidation pattern now. After a huge move up. Very normal. And it may stay in this pattern for, I don't know, maybe another 6 months. It's very possible. But whenever we come down here to one of these levels, look what kind of great opportunity this would be to enter along here, anticipating a bounce towards the middle in between support and resistance. And we actually called it out when prices were exactly down here. Look, our trade notes for Eli Lilly on May 21st, or 21st, 31st. Yeah. Where did we call it out? When prices were at 737. At the lower end of this level. And look what kind of beautiful move we had off this level. This is exactly what we're considering. And here, look at trend radar. A clear sign of a sideways channel. Fully green patches replaced by fully red patches. Back to fully green, back to fully red. That's a sideways consolidation. So I hope this makes it clear, Steph, that this is a different market phase we're in for some of these symbols, which are now more sideways than in a strong bullish trend. Just to contrast this, I know I ramble a lot, but just to contrast this, let's look at gold. Gold is, in gold, we don't have this sideways consolidation yet. It may happen here, but we're not there yet. And here, we have the case where, okay, we're clearly fully bullish. You can see it here. Green, green, green on trend radar. And every once in a while, we have a bit of a red patch, but not all the way down. This is a sign that this bullish trend is still very much intact. And this is also tradable. But here, we would wait for these pullbacks to happen. 4 levels on trend radar and then enter long. For the other ones, for Eli Lilly, I really want to see prices come to a key support level and then enter, not necessarily based on what trend radar shows me. So I hope this makes sense. All right. Okay. So back to my watch list, or our watch list, I should say. And let's have a quick look. Where did we stop? We had FICO, now World Acceptance Corporation. I really like this name. Let me just quickly look in which sector they are in. Financial services, credit services. All right. Long break retrace. Yeah, I like it. Nice pattern here. Let's just have a quick look. And just to be, you know what I'm going to do? I'm going to open this up on TradingView just to have a quicker look of more historical data to see where we are in right now. I'm not sure why the dashboard has a bit of an issue showing historical data, but let's just see what's going on here. Where are we coming from? Okay, that's what I wanted to see. Did we ever have higher prices in this stock? Yes, we did. All the way up here to 260. Huge retracement down to 60. Boy. Then we have been sideways consolidating. And now the break above this one. Yeah. Definitely tradable. Zone break retrace. As you can see it here in our on TradingView. You know what? I'm gonna skip this one. It's not my ideal case. I like stocks where we actually have historical highs, even though the next, resistance level from those older highs here are miles away. I will pass on this one. So let me go back to the dashboard. Oops, there we go. Okay, and CrowdStrike Holdings. All right, yeah, that's definitely one of my a stock that fits more my criteria. Also, here's a nice zone break. Prices went up for quite a bit, couple of weeks, and now the retracement down to this broken level. So I like this one. I want to add this one to our watch list instead. Perfect. All right. So I do think we have a nice watch list for next week. A couple of good candidates. My favorites being CrowdStrike and potentially Coca-Cola if we see the move down. Or Coke, I should say. Coca-Cola consolidated. If we see this move downwards here, this may take a week or 2 weeks to happen. But if it happens, this could be a great long opportunity. All right. Now, Nicholas, can you add the 30-day or 90-day implied volatility to the dashboard? Yes, Gerald, that's something we are currently considering. The problem is that our data provider doesn't give us this data, so we have to approximate it from option pricing by relating what are option contracts at the money costing right now and kind of infer the implied volatility from there. But that's something we are considering. So, Nicholas, any symbol requests right now?
Yeah. To start off, we have CL, Colgate.
All right, toothpaste. Colgate. There we go. Okay. Bullish for 395 trading days. All right. Definitely in a sideways consolidation. Yeah. And this is what I meant. These phases of consolidation, especially after a big move like this one here, prices came all the way up. Look at this nice bounce of support here, all the way up to all-time highs, I believe, on September 5th. And now a longer term pattern here of consolidation. But interesting setup. Liquidity capture on the last bar, I believe, or the last second to last, no, last bar, and right at support. I like it. Great symbol. And the only thing here, which I would be aware of, I want to point out, is that this support level below here at 85 is very nearby this one. So remember what I said. If two levels are very nearby, oftentimes it's the lower one, which is more significant. So I think it's a great idea to scale into a position here, but just make sure your stop is below the second level. But yeah, definitely an interesting one.
Thanks, Daniel. And now Nestle.
Nestle, okay. Swiss company. Nestle India. We don't have Nestle. What's the ticker symbol for this?
Let me check.
Otherwise, I'm just gonna open it quickly here in TradingView.
It is SWX, I think.
Where is the symbol?
It's on the Swiss Stock Exchange. The currency is CHF. I'm looking at.
Okay.
Or sorry, not.
I don't even see it. Where is this? Should be in here somewhere.
Oh no, it's SWX.
Yeah,
SWX.
SWX. No.
Well, there it is. Is that it right there? No, that's price index. No.
Nah, let's skip this one.
Maybe I think it's that. Maybe you can correct me, Garrett, please, if I'm wrong.
Yeah. Okay.
The next one's XRP.
Ripple. That's Ripple. All right. I believe. Yeah. Bullish for 259 trading. Wow, what a move. I still have some Ripples. This was a purchase back maybe 10 years ago. Maybe even longer. Actually, let me see.
Daniel, it turns out SWX was the exchange. NESN was Nestle.
Okay. All right. We'll check it out in a bit. Yeah, Ripple is interesting. Exactly at this resistance level. Oh, definitely at the crossroads here. Prices are struggling a bit after this huge move up with this former historical high now acting as resistance. Yeah, here I would like the market. I would wait for the market to decide what's going to happen next. Will this level hold? We may see a bounce to lower levels. If we clear it completely to the upside, then I think new higher prices levels are in order. But here I would really wait for the market to resolve this.
Very interesting. Yeah, and that's also the United States government said XRP is one of the ones they're going to put in their strategic reserves. Ethereum now.
Ethereum. All right, and I hope Nicholas, give me 1 second. I'm just gonna close the window. There's a car alarm going out in front of my office here. Just give me 1 second. Give me 1 second, please. I'm just gonna hide my video real quick. Okay, I'm back. Sorry for this. That's the joys of having an office in downtown Montreal. And this car alarm is still continuing. I hope it's not going to be one of these cases where, oh, there we go. Whew, thank God. Okay, so Ethereum. All right, ETH, USD. Yeah, I mean, I guess all the cryptos really went up with the big hype on Bitcoin. But what's interesting here is that we are nowhere near our all-time highs actually here. We look a bit further back. Yeah, look at this. We're approaching a key resistance level, but we're actually still quite far away. This level is at 4,080 around. Definitely on our way. Supex, then look how far we are away from our averages. I would not enter long right now here. Too risky. Maybe if we come down a bit, yes, and then anticipate a move up towards this level. And at the latest here, I would book my profits in Ethereum because this resistance level, yeah, looks quite significant. And we may see a couple of bounces off this level.
Thank you. And now the next one's Disney stock.
Disney, yes. All right.
And Vicky, in case you didn't see the response, yep, it's going to be posted to our YouTube, and I replied with our YouTube channel, but all these sessions are recorded and posted.
Yeah, absolutely. Yeah, Disney is interesting. The fact that we are right at this resistance level, definitely not long for me. We are bullish. So we may bounce off this level to a bit lower levels of price. I definitely would wait here for this level to be clearly broken and then potentially consider a long position. Right now, it's too risky. We may bounce off this exact level here. So prices are really in the middle here. So I would wait for this one to resolve. And, if we bounce off this level, look, this big gap here hasn't been closed yet. So, worst case, we're actually going to come down all the way to test this gap here to close it at 92. So I'll definitely be careful of Disney.
Thanks. And
All
did we
right.
already look at Darden Restaurants, DRI?
Not yet. I did look at in my previous webinar this morning with the German-speaking crowd, but not today. Yeah, Darden didn't work out as planned, unfortunately, so far. I still have hopes for it. It's definitely a stock which is in a very consistent uptrend. We have a level 4 pullback on trend radar. It's all good. But this zone break retrace setup, you can see it here. We had a zone break. Prices came up. I thought, yes, at this point, a nice entry opportunity, and prices are gonna move from this level to higher levels. Didn't work out. We broke it, and now we're trading towards the second MA rush line, which could act as a dynamic support. And there's some initial signs that, yes, we may see an end of this correction. Trend radar is showing level 4 pullback, which is encouraging. And I still like it for long. So even more so right now to potentially enter into a long position. And this is a stock which is so bullish, so consistently bullish that even if it comes further down, I would not be worried about this one. So the stock is probably going to recover eventually from this correction.
The next one is OSIS. OSIS.
Yeah. OSIS. OSIS, Technology Electronic Components. It had liquidity capture near support 5 bars ago, bullish of 597 trading days, and near a support level. Cool. Let's have a look. All right. Yeah, nice one. Let's have a quick look here. Let me just quickly hide one thing off this one. Okay. Yeah, looks good. Yeah, bullish. Definitely a nice bullish uptrend. Now a correction down to this support level. I want to have a bit of a closer look here because I think this gap, I trained my eyes to obviously look at gaps like this one here. I think this was closed or almost closed. Look at this bar here, it wicked down. So I'm going to call this one as the gap close. It has been done. And now, after this close, yeah, we may see a nice bounce of this level. I like this one. Good call. Yeah. I mean, if technically it's not completely closed yet, so we have to come down to this level, but that's close enough to me. Yeah, good one.
Thanks, Daniel. And now, if you could take a look at this question, anonymous asked, can we use the dashboard to find good 0 DTE trades? So I don't know what those are.
Oh, these are option trades with 0 days to expiration. Basically, well, typically these are only traded on the SPX symbol, on the S&P 500 cash symbol. And basically, there the options chain gives us options of for every single trading day. So we have options that expire on Monday, on Tuesday, on Wednesday, and so forth. And these are really option day trades where you would enter or buy or sell an option, and then close them out the very same day before they actually expire. And the answer is no. This dashboard would not be so good with this. What I would use for well, these kind of trades is to use our trading view indicators instead. So here, because you want to go to the smaller time frames to find good setups and want to buy or sell these options. So go to the SPX on the 5-minute time frame, maybe even add on volume IQ. Sorry for the small detour here. Add volume IQ to it. Just hide this mentor mode off a second. There we go. And we configure it with 30-minute time frame. There we go. Okay. So now with this one, once this reloads, you will be able to find these trade opportunities because you see key support levels like this one here on much smaller time frames. And of course, then you can time your option day trades based on this. Imagine buying call options here. Yeah, that's possible with our trading view version of the indicators. So if you're interested in finding out how you can get them, send us an email, please.
Thanks. So the last symbol request we had is to now look back at Nestle, and the
Yeah,
symbol should be, I think, NESN.
NESN. All right. Nestle, this one. Okay. All right. Let's check it out. Let's go to our daily time frame. Let me just configure this real quick. Short. There we go. All right. Oops. All righty. So what do we see here of Nestle, the Swiss chocolate manufacturer? Definitely a bearish trend. This is a daily time frame here. I've been coming down, yeah, consistently. Bounced a few times off key resistance level here. This could have been great short opportunities. You can see it here. And look the amount of liquidity captures. All these shaded areas, these are liquidity captures. And as I mentioned, these can be great telltale signs that, hey, this bounce is actually happening. But now, yeah, definitely bearish, and we're moving towards this support level. So would I go short here? Probably not. There's not enough room left to this key support level. Would I go long? Neither, because we're super bearish. So yeah, I would not do anything with this stock right now.
Thanks. We have a question now from David. At what point, if any, would you enter a trade in a long break liquidity IQ setup?
Yeah, let's have a quick look. I really liked one that I saw this morning when I prepared myself for this session. Let's go to long break. We sort by the ones that happened on the most recent bar. And we see here, for example, this one, Interactive Brokers. That one, oh, Toast as well. This is a good one too. Yeah, look, what do we see here? Let's have a quick look. So we broke above this key resistance. What did we? Where's my key resistance level? 1 second. You know what happened here? For some reason, our data is not loading properly far enough back. So anyways, so we broke above resistance. I believe it was somewhere here. And would I enter right now after this big gap? Probably not. Why? Because we're too extended. And oftentimes that's the problem of zone break trades. We're very far away from our averages. And if there's a gap, then I always think, hey, this gap is going to get tested eventually. So prices have to come down to this level, which would coincide with this former resistance level here. And then I would enter into the trade. So it really depends how far away we are already from the zone break. It's kind of a fine line. Let's look at Toast here. Also, zone break retrace trade, a zone break trade. So here, we broke above resistance. All right. And would I enter now? Yeah, I personally don't like it when prices are just breaking out. It feels like kind of chasing the trend. Of course, this is not the case here. We actually came down quite a bit on Friday. Let's see where we are on Monday. I still may not like it too much because we're still like kind of in the proximity of this broken zone. So I really personally, I don't trade the setup so often. I wait for the zone break retrace, where we actually broke above it previously, and then we came back. Like yeah. Let me just find one like CrowdStrike we had, maybe a different one, which we didn't discuss yet. Cohen and Steers Infrastructure Fund. This one. Zone break here. We came up and down, and now I want to enter. Look how close we are to these averages. That's where I like to get in. And we'll put my stop loss just below here. Get in now, anticipating the long trade trying to continue. I hope this clarifies it.
Thanks. And we don't have any other questions. I'm just scrolling back up to make sure.
All right.
Nope, that's it. That's everything so far.
Perfect. All right. So let me go back to my slides. And just to recap, oops, this is an old question here. Just to recap, please download our ebook, The Power of Three. The link is in the chat. And if you want to come on board and do your scans on your own, you know, we are scanning every single day with this dashboard because every single day new setups will come in. And oftentimes we execute on these trades. They are in our portfolio, either as option trades, as I mentioned with JP Morgan, sometimes as outright trades, or sometimes there's like a mix of things. So yeah, come on board at tradingindicators.com/view. There's absolutely no contract, and you can try it out for 1 week completely for free and cancel anytime if you don't like it. Also, our bootcamp, as mentioned before, available at tradingindicators.com/bootcamp, where we really go through every single setup and every single feature of that the dashboard has to offer. So we re-recorded this, I think, about a month ago, maybe 2 months ago, because we had so many new features introduced. So we had to re-record the bootcamp, and now we're at the position where it's slightly out of date again because we added more features, like a shared watch list, like the currency of a symbol, like the exchange where it's being traded, and more features are to come. We want to correlate stocks with the ETF that's in the same industry group, see if it gets a boost from the whole industry pushing further or pushing down. This is all going to come in the near future. We also have plans for seasonality, for a more advanced gap scan, and so forth. So lots of plans for the dashboard. Come on board now to take advantage of this scanning system. All right. So with this, guys, if there were any questions which we missed or didn't answer, please reach out to us at tradingindicators.com. Go to the main menu, click on, I guess, contact or join or support, click on support, I believe. This will open up a site with a contact form. Put your question there, submit it, and it will end up in my inbox, and I will answer every single question personally. And if I don't do it, then Niklas or Homa will do it. All right. With this, guys, have a great weekend. Take some time off from the markets, relax, and then I see you all next week. Thank you very much. Bye-bye. Thanks, Niklas.